I'm Stan Longhofer, Director of the WSU Center for Real Estate. Thanks for joining us for this quarter's Wichita Housing Market Update. In this edition, we'll close out 2017 and look ahead to what's in store for the spring selling season. The Wichita housing market ended the year on a strong note, with total home sales rising by 4.7% in the fourth quarter. As a result, 2017 was the sixth straight year that home sales have increased. All of this growth, however, is due to existing homes, where sales are approaching the levels seen at the peak in 2006. In contrast, new home sales have hovered between 600 and 700 units annually for several years. As a share of total home sales, new homes currently make up only 6 to 7% of the market, compared to 17.5% back in 2006. Rising sales, combined with a lack of new construction, has led to tight inventories. This is especially true for homes priced between $100,000 and $250,000, where the inventory of homes available for sale has fallen to just a 2-month supply. At higher price ranges, inventories are somewhat larger, but even in these more expensive areas, it would be hard to call it a buyer's market. Because of the limited number of homes on the market, existing home prices in the Wichita area have begun to rise at a 3 to 4% annual pace. This is a robust and healthy level for our market, similar to what we experienced in the 1990s and early 2000s. New home construction in the Wichita area has remained essentially flat for the past 5 years, and well below the peak levels seen in the early 2000s. While there has been an uptick in duplex construction in recent years, it hasn't been enough to offset the declines in single-family activity. Part of what is holding back new construction is that new homes are now relatively expensive compared to existing homes. During the housing downturn, existing home prices flatlined. While Wichita didn't see major price declines like those that hit coastal markets, we did have 6 years of flat or slightly falling home prices. At the same time, the cost of building new homes continued to go up. As a result, right now buyers can generally get a lot more home for their money with an existing home compared to a new one. Eventually, stronger existing home price appreciation may change this value proposition and spur new construction. Unfortunately, we still think this is a few years off. So what do we see looking ahead? This is the year I think that mortgage rates will finally start rising to more normal levels. After falling through the first half of the year, the 30-year fixed mortgage rate has risen sharply in recent weeks. This is largely due to an increase in the 10-year Treasury rate, a benchmark that often drives changes in mortgage rates. I think this will continue because the Federal Reserve has begun to unwind its holdings of longer-term Treasury and mortgage-backed securities. While this process will take many years to finish, it will put slow, steady, upward pressure on longer-term interest rates, including mortgage rates. As a result, the Mortgage Bankers Association is forecasting that the 30-year fixed mortgage rate will slowly rise to 5.3% by the end of next year. This is at the lower end of what I consider to be the normal range for mortgage rates in a healthy economy with low inflation. This concludes this edition of the Wichita Housing Market Update, a production of the WSU Center for Real Estate. I hope you found it interesting and useful. Until next time, thanks and have a great day.